A couple of nights ago, I was scrolling through my feed, trying to doom scroll myself to sleep. And then this video popped up.
I spent $5.3 million on this Pikachu card.
Because Pokemon has outperformed the stock market by 3,000% in the last 20 years.
Wait a minute, this is gotta be a lie, right? Cards I had as a kid outperformed the stock market by 3,000%? So I decided to look into it. And what I found was way bigger than I expected. From Logan Paul to Steve Aoki, even this guy, the vampire-born 1601 from Marty Supreme. We actually did a full breakdown on that marketing campaign. If you haven't seen it, go check it out. I'd really appreciate it. But back to this.
And I just started, and I thought it was nuts. I said, why would anybody pay $1 million for a piece of cardboard? He said, you don't get it.
So somehow, a piece of cardboard became one of the most valuable things in the world. More valuable than watches, cars, or dinosaur bones? A Pokémon card just sold for $16 million, and that's not even the craziest part, because behind that sale is a $100 billion market built on things you probably threw away as a kid. You probably have a friend or know someone in the collectibles market. They've probably told you this is the next big thing, how you can make money from cards, how it's outperforming the stock market. And right now, it's starting to look a lot like Wall Street, but for collectibles. This is an 8-minute breakdown of the collectibles market boom. Let's get back to the first video we saw. The claim is that the Pokémon market outperformed the stock market by 3,800% over the last 20 years. Well, while that claim has some real statistics behind it, the framing of that statement isn't entirely accurate. Yes, certain Pokémon cards have accumulated that level of return, but it refers to a specific index of high-end collectible cards, not all cards. This depends on a card's value, rating, and rarity, something we'll get into later. So in other words, it's not a fair apples-to-apples comparison. But you can't ignore the facts about a few years ago, collectibles were much simpler. You had binders, boxes, maybe a few rare cards if you were lucky. And today, those same cards are being graded, traded, and flipped like financial assets. According to major financial institutions such as Morgan Stanley, the collectibles market is now worth over $100 billion and growing steadily every year, which is incredible. Trends show that this market moves in cycles similar to stocks and crypto. Take Pokémon cards, for example. In 2016, when Pokémon Go took over the world, prices surged. In 2020, during the global pandemic, people returned to cards and prices skyrocketed again. And now in 2025 and 2026, with new releases and economic pressures like inflation, people are once again turning to cards as a way to make money. But it's not just about size. It's also about who's entering this booming market. Adults, or what many call kidults. These are nostalgic people in their 30s, 40s, even 50s who grew up collecting Pokémon, sports cards, and memorabilia and are now coming back with money. Some are looking to cash in, while others aren't just collecting. They're investing. At this point, you're probably wondering, okay, I have my Pokémon cards, so how can I make money from it? At the center of this shift is something most people don't understand. It's called grading. In simple terms, you submit your card to a grading company. They authenticate it, evaluate its condition, and assign it a score. 10 being virtually perfect, while 1 to 5 are considered heavily damaged. And the difference between a 9 and a perfect 10 is huge. It can mean thousands, sometimes even millions of dollars. Remember earlier when we said not all cards delivered massive returns? This is one of the main reasons why. To put it into a stock market perspective, grading is similar to a credit rating. A PSA 10 card is like a AAA rated asset. And just like credit agencies such as Moody's or Standard & Poor's, card grading has its own authorities. Companies like PSA and CGC dominate this space. Each grading comes with a cost based on the number of cards and their estimated value. Now you can start to understand why a card could sell for over $5 million and still be expected to increase in value. The Pikachu Illustrator isn't just rare, it's perfect in market terms. Only one exists in that condition, which is why it reached extreme valuations. Because in this market, rarity alone isn't enough. You need scarcity, condition, and a story. So if you're thinking, wait, this is more complicated than just buying and selling cards, you're right. People have even created terms like Pokémon economics to explain how this market works. If you go online, you'll see videos of people buying massive amounts of packs just to create scarcity. But in doing so, they're killing the fun of collecting. Others take a different approach, buying up all available copies of a specific card, then relisting them at higher prices to create artificial hype. There are even online communities built around these strategies. And if this sounds familiar, it's because we've seen it before. In stocks and crypto, this is known as pump and dump schemes or rug pulls. The difference? In traditional markets, this is illegal. In the card market, there are far fewer consequences. And that's without even mentioning the cost of entry today. In some cases, packs are so expensive, they rival a person's monthly income. And ironically, many collectors don't even open them because sealed packs are often more valuable. So with all these factors, how did it outperform the stock market? The answer is simple. Only certain cards did. For example, a 1999 base set first edition Charizard, a 1998 promo Pikachu Illustrator, or early Charizard variants. In certain periods, these cards saw massive spikes in value, far beyond traditional investments. For instance, a 1999 base set first edition Charizard went from around $1,000 to $5,000 in the early 2000s to between $300,000 and $550,000 by 2025 to 2026. And just like in stocks and crypto, stories like these attract attention. They pull in a whole new type of buyer, not just collectors, but traders. Suddenly, this wasn't just about nostalgia anymore. It became a game. People started flipping cards, tracking prices, watching markets in real time, opening packs, hoping to hit something rare, like a lottery ticket. Entire communities formed around it, live streams, box breaks, auctions, and all of it has surged in recent years. With celebrity influence, this market exploded even further. Even platforms like Netflix have built shows around it. But that's where the story changes, because not all cards are valuable. In fact, most aren't. During previous booms, people bought anything they could get their hands on, and history has already shown what happens next. In the 1990s, we saw similar trends with Beanie Babies. People thought they were investing, but those items today? Almost worthless because overproduction destroyed scarcity. And even now, the same pattern is starting to show. The best of the best, the rarest cards, the ones tied to history, they keep going up. But everything else moves slowly or not at all. So what actually determines value? It's not just age, it's not just rarity, it's demand. And demand comes from people. Every generation values what they grew up with. Older collectors chased baseball legends. Newer collectors chase Pokémon, games, and culture. And as they gain wealth, they chase the best version of those memories. That's how a piece of cardboard becomes a multi-million-dollar asset, not because of what it is, but because of what it represents. And now the market is evolving again. People are exploring all types of collectibles. Assets are being securitized. Entire portfolios are being built around them. At the same time, everything is becoming a collectible. Cars, sneakers, watches, even whiskey. Even major corporations have noticed the shift and are capitalizing on nostalgia-driven demand. But here's the issue. Not everyone is collecting for the love of it. Some are there to manipulate demand, to make money. If value is driven by demand, what happens when demand changes? That's where collecting starts to blur the line between investing and gambling. So the question is no longer, are collectibles valuable? We already know they are. The real question is, what kind of market is this becoming? Because when nostalgia meets money and money meets hype, you don't just get growth, you get volatility,
you get speculation, and eventually, you get bubbles. And we've seen this before. Markets that feel unstoppable until they aren't. So maybe your childhood cards are worth something, maybe even a lot. But the truth is, most people won't find a $1 million card. Most people won't beat the market. Because this isn't really about cardboard. It's about something much bigger. It's about how value is created, how culture evolves, and how a new generation is redefining what wealth looks like. So the next time you see a Pokémon card selling for millions, just remember, you're not looking at a toy, you're looking at a system. And the questions you should be asking aren't just, are you early? Or are you already too late? If you had cards growing up, would you sell them or hold them? But do you think this is the future of investing or the next big bubble? How much are you willing to risk if this all goes bust? Let us know in the comments. We'd really love to hear your thoughts. Like and subscribe for more videos. And if you see the collectibles market as a stream of passive income, check out our video on the truth of passive income.